This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So today I want to spend a little bit of time talking about the MACD histogram. I got a question regarding this, and it's not something I have spent a lot of time on, but I think it's important to understand, and it can set ourselves up. If you watch the whole video, you can see that it can set yourself up if you want to be a little bit more on the aggressive side for one of the best trades, I think, in the stock market. So let's get into this now. I want to give you the example. Actually, I've got three examples I'm going to use. I'm going to start with GM on a weekly chart because I want you to first understand what is actually taking place with the MACD and that MACD histogram. So the blue line here is the MACD, and that's telling us the difference between the 12 exponential and the 26 exponential moving average. And so if the faster line, the 12 is a faster line, it's a shorter term line, if that's moving down faster than the 26 exponential moving average, then this line is going to be dropping. But if we've got these two moving averages and I've got a 12 and a 26, right? If the 12 starts to lose a little bit of slope and this continues down, then this line is going to lose its slope and start to turn up. So it gives us a little bit of an idea in terms of the momentum because you're comparing kind of a shorter term move versus a longer term move. What the histogram is telling us is the difference between, so this is the histogram here, these valleys, and then these mountains, right? And then we have a zero line right going across here. So what this histogram is telling us is the difference between, not between the 12 and the 26, because that's the slope of the blue line. But we also have a 9 exponential moving average that's acting as it's a moving average of the blue line. And what the histogram is telling us is the difference between those two lines. So if the blue line is getting further away from its signal line, then this mountain is going to get, this valley is going to get bigger. And if you notice here where we cross over, we go from red to green, that's where we're actually switching over to the upside. And this MACD is actually crossing over its signal line. Now, if these are growing to the upside, it's telling you that the MACD is getting further away from its signal line. So that's really that's essentially what it's telling us. And we can see that if you look at this move here and then we get a little dip here and then it moves back to the upside, you can see that it shows you in more detail the pinches, because sometimes when you get these turns like this, the MACD will actually look like it's still rising, and in reality it's pausing, and you can see it a little bit easier by looking for this drop in the histogram. So if we get this type of pinch, so this is very obvious. You see that kind of pinch where we're seeing the pullback here, but it's really obvious to see that we're pinching with the MACD into the signal line. Same thing here, you can see the pinch. So I think sometimes it's a little easier, especially when we're turning, where the stock is trying to turn things around. A lot of times it's a lot easier to see those pinches off the histogram. So that's one thing. And then you have your understanding of these crossovers, and then here's where it crosses over to the downside and we turn back to red. So that's the basics of MACD. So how do I use it? So again, I focus more on the signal, on the MACD and its signal line. I don't spend a huge amount of time looking at the histogram, but there are certain times where it can be an advantage. Now, what I want to show you is as this moves up and then pulls back, we can see we get a nice move to the upside in MACD, and then we get a pinch. This, to me, is telling us this is the strongest part of the trend. If I go and look at this and say, where was the strongest part of the trend? Well, I would say buying that pullback is probably the best trade you had. And I don't have to look at anything else. I can just look at the histogram because I can see that that was the peak in the momentum, essentially the distance between these two lines. That's showing you how strong it is. And then we get the pullback. And so that type of pullback, I think, is something we want to be on the lookout for. So every time the histogram makes a new high, we want to buy a pullback like that. Now, notice what happened after that. We got a pullback and then we went to a new high and then we got another pullback. But notice what happened to the histogram. The histogram did not make a new high. MACD did. Okay, there's a big difference here. You see how the MACD is making a higher high here and the histogram is making a lower high? So this is giving you a much more sensitive look into the momentum. What this is telling us is that the difference between these from here to here and from here to here is shrinking. So how big of a negative is that? What it tells me is that I've got to be a little bit more careful. I'm still willing to play this pullback because I went to a new high in the MACD line. The fact that this is dropping is telling me that I have to be a little bit more careful about what's going on here because we could be setting up for a reversal in the trend. So the way I look at it is I don't like to use the histogram divergence a counter to the trend. Okay, the trend is up and everything's moving up. We're making higher highs and higher lows and we're confirming the new highs with MACD. So I'd be very reluctant to play a divergence play using the histogram this way. Okay, now if the MACD comes down and crosses over before going back up like that, if it crosses over its signal line, then that's different. This will turn red and then it'll go back to here. Then I'd be willing to play the divergence as the histogram starts to come back down. So I'm hoping this makes sense to you, but that's something I'm going to show you in a second how that would work. Now, the other thing I want to point out is that as this is dropping, I want you to think about it like this. Let's say you're standing on the first floor of a building and you have a rubber ball in your hand and you drop it down to the parking lot underneath. Okay? You're going to get a pretty good sized bounce the first time. And then as it comes down, it's going to bounce a little more and then a little more. That's essentially what's happening here. We're losing momentum, but it takes time to really wear off. When you have a big, powerful move and a big bounce, you still got pretty good strength. So sometimes it takes a couple of these bounces to really start to get it to a point where it starts to inflict damage on the trend itself. So I hope this makes sense, but let's just go. I'm going to give you the next example, JWN. So I want to show you how we've got, and I'm going to switch to a daily chart. So what I want you to see is I've got stock going to a lower low here, and the histogram is confirming the MACD. So the MACD is showing divergence here, right? But it is blatantly obvious when you look at this valley and compare it to that valley. Now, this is making a new low in price, and look at the difference in the valley. So sometimes it's really easier to see when you look at the histogram and you figure out what this is actually telling us. And I do like to see, if I'm looking for a divergence play, I do like to see this go from green back to red. So it goes red back to green, maybe not this big, but then comes back on the red side while price is going to a lower low. So that's a classic divergence play using the histogram. Let's look at one more thing here. I'm going to show you AMD. Now, I want to get back to 2 time frames. So I'm going to show you. So what's going on the weekly chart is we've got strong move to the upside and a pullback. We've got a pinch play developing here, and you can really see it with the histogram. And you've got strong ADX. So I know based on the weekly chart, I've got a nice pattern developing. Now I'm getting a pullback to the moving average. Okay, so that's kind of my starting point. Now that's essentially, that is, let me just show you where that is showing up. So I'm going to circle this so you can see. Now let's highlight this on the daily. So now what I'm looking for are signs that that there's a reversal taking place. And the earliest point I can find is going to show up in the form of a divergence. Now, the problem is that the MACD is a 1226.9. It's not a short-term indicator, okay? So it's not going to show you divergences. You see how the MACD is making a lower low here? It's just not going to give you it's not sensitive enough to show the differences. You can't actually see it with the naked eye. Most times you can't really tell the difference between the MACD and its signal line here. So that's why sometimes I like to look at the histogram. You notice how this bottom and this bottom are basically the same, and we're comparing this low. Even though this went to a lower low, this actually doesn't show enough divergence for me. Remember the bouncing ball? I mean, it takes a little bit of time to reverse the trend. And so once this rallied up again and then came back down this time, now we have a rally up and we come back down and test. So at this point, when I get to here and I'm down in this zone, basically right at the beginning of October, I am now okay. If I want to be an aggressive trader, I am really okay with going down to an hourly chart and looking for a sign that this trend is shifting back to the upside and not waiting for a full-fledged shift back to the moving averages or a full-fledged shift of the MACD turning back up. I've got some signs that this is turning back to the upside. I've got a really good-looking weekly chart. I've got a stable pattern here with a double bottom. And one other thing that we should confirm, let me just do this. Actually, I don't have the ADX, but the ADX should be showing a low ADX on this pullback. If you have that, then I think you can play this aggressively with the MACD histogram showing divergence. You can be a little bit more aggressive and look to play maybe the first green bar back up, a bigger green bar closing back above, the last 3 or 4 days here. So, it's kind of like we've got this test here taking place. And then this is the first real sign of strength. Now, the bigger this green bar, the better. But I would be okay, and I bet if we go down to the hourly chart, I'd be willing to bet that we have some kind of a reversal signal taking place on the hourly chart that we can play. So that's how I would do this. I wouldn't necessarily wait. Look, you don't have to do it this way. You don't have to play it aggressively, but if you want to take advantage of looking at the MACD histogram this way, then that's where I would take advantage of it. Now, the difference is that we're playing with the trend. We're not playing against it, right? I don't want to play the reversal against the trend using the histogram divergence. I want to play it with the trend. This is with the trend because the weekly is going up. So you got to recognize that. And if you do, then you can really go down to your hourly chart here and play for something more aggressively. Now, the other thing I'll warn you is if you're going to do that this way, you have to be willing to, you're playing off of an hourly. You might have to get in and get out. Maybe it gives you a quick little trade and then play it a second time. It might take you 2 stabs instead of 1. But let's look at it this way. If you play it off the daily chart and you risk $500 on a trade, okay, you should be able to do it off an hourly and risk $250, maybe even less. And then you can take 2 stabs of $250 and you're not losing anything more. You're getting 2 chances, but let's say it works on the first try. Well, then you only put up $250 to get that trade. Okay, so this is another way. There's 2 different ways to trade, right? You can use a wider stop and versus a tighter stop. And if you use the tighter stop, you might have to use a re-entry strategy. You might get stopped out and then have to play it again. But you should be risking less on those trades and be able to take 2 of them rather than just 1. So anyway, I hope that makes sense. But I don't want to get it too off track. MACD histogram in the direction of the trend. The weekly chart has to look real. The higher time frame chart has to look really good. And we don't want to see a lot of ugliness in the bars to the downside. And you got to make sure, this can only take place. You only do this trade with red DI, not crossing above 25. Okay, hope this makes sense. Go ahead and post any questions or comments. We'll see you next time.